Good afternoon and welcome to HYCM's webinar FX Week Ahead, live market analysis with myself, Giles Cochran, as we look ahead to the most expected, anticipated events on the data calendar for the coming week. Just before we get started, just going to give folks a chance to come into the webinar. Just saying hello. Hi, Chris, Fahana, Santosh, good to have you. Guys, don't forget, if you can want to ask any questions during the webinar, please use the question panel, which is on the GoToWebinar control panel. There's a section marked questions with a little triangle pointing towards it. If you click on there, you can ask questions away. As other folks are coming into the webinar, just going to go through the disclaimer that we should go through each week. And this is just making it clear that the whole point of this look ahead webinar is not to offer trading advice or provide trading signals. It's to provide an education as to what kind of market moving events I'm looking at in the coming week ahead. And by looking ahead and preparing ourselves well in advance, it's a basic market practice that many full-time traders are constantly doing, getting ready and prepared for upcoming events, rather than just sort of trading on some technical system or a technical change on a weekday. The FX markets are driven by news, and those news events are often scheduled in advance, and traders are looking at them in anticipation of them so that they can be prepared. So that's what we're going to be looking at today and going through some of those events. However, having said that, we have a really light data week ahead. There isn't a lot of really market moving data that's scheduled for this week. So that's the first thing really to note. And the market really wants to focus in on news events in order to move currencies. And in this week we have the absence of a lot of scheduled data that's particularly market moving. So that's the first thing to be aware of. And probably the biggest overarching story we've been having at the moment is the US-China trade negotiations, and whether phase one trade deal is going to be signed or is not going to be signed. So that's likely to be the most driving event this week, is those negotiations and how they go. So just want to be aware of that. The first thing to be aware of is what's driving the pound right now. Since we've started, the pound is being driven. I just wanted to say as well, I'm just recovering from the flu, so if I sound a little bit nasally or I'm not as clear as I normally am, it's because I'm just recovering from the flu. I had it when I was coming back from a flight from Malaysia last week, and I have to say, flying with the flu is probably one of the most uncomfortable experiences I've had recently. So that's why I may be a little bit unclear, and if I sound a bit bunged up, I'm just trying to recover from that flu. And I think I'm just on the better side of it now. I think I'm winning, but I'm still not 100% yet. But anyway, at the start of the week, one of the most strongest currencies has been the pound. So I just want to explain to you why the pound has been strong. And basically, there's a series of polls. So a poll is an indication of how voters are going to vote ahead of the election, right? So in the last poll that the last three sort of polls that have been released have shown a conservative lead. Now, in the UK, these are the major parties: Conservative, Labour, Lib Dem, Green, Brexit, etc. And the leading party at the moment is the Conservative Party. Now the most most supportive for the pound is the Conservative Party. Okay, the stronger, the bigger the Conservative Party lead, the more likely the pound is to be bid. That's because this is the most likely path of Boris Johnson's Brexit deal being voted on, being passed, and being accepted into the UK law. So this big boost that there's been recently, this is a YouGov poll showing, like, I think it was a plus 5% increase from 40 to 45% share of the vote, and there hasn't been a corresponding increase in Labour. So the lead has really benefited the Conservative Party. We also had last week the Brexit Party said that they weren't going to contest some key Conservative seats. So the result of their move, the Brexit Party's move, is that it was more likely for the Conservative Party to get a majority. So that was very supportive. So this morning, 3 different polls, saying the same thing, a Conservative lead. So this is the poll of polls, Politico. They've got Conservative Party leading 41% to Labour's 29%. So this, sentiment has been very, very supportive for the pound this morning. We've also had generally risk-on tones with the Asian equity markets, gently supported overnight. Nikkei up 0.5%, Hang Seng up 4%, Shanghai up 0.62%. We've also got the S&P 500 futures up 0.20%. European indices are mixed. We've got the FTSE 100 up 0.25%, Euro Stoxx just marginally down 0.11%, French, German indices are flat, and as a whole, we've got US Treasuries yields are up. So as a whole, we're supported for risk. So what we've been seeing is this pound support, and it's because of these election polls. Now, the pound is likely to be pulled around by these election polls going into the general election, which is for the 12th of December. That's the next big event that's driving the pound. And if you take a look at, I'll show you, this is the currency pair that I was looking at this morning. Obviously, the pound was being supported. The yen was weak because of risk-on tones. So going forward, I'm expecting, pound yen buyers on pullbacks. So any sort of pullback down to this 140.93 level, I'm expecting buyers here. And then if you get a deeper pullback here, expecting buyers here. I'm expecting stops down below. So that's, roughly what I'm looking at, and that's why I'm looking at for the start of the week. With that being said, let's move into the calendar. But don't forget, keep looking at the polls. There's the Politico poll of polls, which is good. I like that one. It's sort of it's a combination of all the different polls. And if that Conservative lead gets further, expect the pound to be bid, okay? Because the Conservative majority is good news for the pound. So that's really what's pulling the pound around at the moment as we're waiting for these elections to come to the 12th of December, when we'll get the final decisions made. Right, here we go. So this week, today, there's really not much data going on at all. So expect the risk-on tones to continue. So this will be, what I'm expecting today is, in the absence of any big news, is it's going to be risk tone. So if the risk tone carries on as it is now, then I'm expecting, Australian dollar, New Zealand dollar, Canadian dollar strength, Japanese yen, Swiss franc weakness. That's what I'm expecting. Now, if there's some bad news that comes out for the US and China, then obviously I expect that scenario to change. So what I'm looking at today and throughout the whole week is this risk tone between US and China trade war. So each day when you come into the markets, you want to think, well, what's going on between US and China? What is the risk tone doing today? And remember, the equity markets will often give you a clue on that risk tone. So look into the equity markets. What are the Asian equity markets doing? Wall Street equity markets? What are the European equity markets doing? That will tell you. And obviously looking at yields for bonds as well. Obviously those yields for bonds are increasing. That's positive for risk. So that's the key markets to look at. On Tuesday, we've got the RBA monetary policy meeting minutes. Now, really not expecting much out of the RBA minutes at all. There isn't really particularly much to, there's not particularly any more particular news. We had some poor labour data out in October, so there was an increase of a rate cut. So the chance of a rate cut for February is now increased to 62% chance. But even though there was that poor labour data out in October for the RBA, I'm not expecting anything necessarily particularly revolutionary from the minutes. They will be eyed, of course, they will be eyed, but what's really pulling the Australian dollar at the moment is the US-China trade deal. So if the phase 1 trade deal is looking likely to be signed, then that's supportive for Australian dollar. If it's not likely to be signed, then that's unsupportive for the Australian dollar. But again, the minutes are out, and so just to be aware that market participants will be looking for clues on those minutes. And any clues for any future policy movement. Nothing else particularly market moving on Tuesday, November the 19th. Now, on Wednesday, this is probably the most significant day of the week. The significance here, we've got the inflation data out of the Bank of Canada. Now, the Bank of Canada had been, until recently, the only major central bank without any kind of dovish shift at all. Now, since that outlook has changed, with the Bank of Canada, expressing some concerns that risk is tilted to the downside, particularly there is a risk with global economic outlook and the trade conflicts. So, the Bank of Canada has said recently that trade tensions are restraining business investment, and that's helping to cut commodity prices. So, the CPI data is going to be key for the Bank of Canada going forward, because if we get like a really bad reading here, then expect to see some Canadian dollar weakness as rate cuts will start to be priced in. At the moment, the CPI data, you've got the trimmed, the median, the common, the core. Now, the preferred reading for the Bank of Canada is the common reading here, and that is expected to be around 1.9% year on year. The target is 2%, so that's everything is okay as expected around that 2% target. Obviously, if there's a big miss, 1.7, 1.6%, then that's going to weigh heavily on the Canadian dollar. If we're hitting target, that's going to be positive. But obviously, you've got to remember with the Canadian dollar, it's not just the data. You've also got the close links with oil. When oil prices are supported, that's supportive for the Canadian dollar as well. So obviously, any OPEC oil cuts, any supply issues, any global growth concerns, that will all weigh on oil, which in turn would weigh on CAD. So you've got to sort of put these different bits of the jigsaw together for CAD. However, just focusing on the CPI for now, okay, that will be key for Wednesday and the immediate path of the Canadian dollar. So that's one to really look out for, and that common CPI is the key measure for the Bank of Canada. So that's one to really look at and really be careful of. And in turn, you've also got out of the Bank of Canada this week retail sales. The retail sales are here on the Friday. Okay, again, these two events are important for the Bank of Canada, as well as GDP data, which is important for the Bank of Canada. Just remember the base context, which is, Bank of Canada concerned about global growth, concerned about business investment. So, any weak inflation data is going to add to those concerns, and it's going to increase the probability of like a December rate cut. And a December rate cut is currently seen about as a 25% probability and like a 50% probability of a rate cut at some point in 2020. So weak readings here, and you're going to see that number rise, and you're going to see CAD sell off. So that's that's the most significant event to be looking for this week, for sure. It's the scheduled event, should I say. It's the Canadian CPI data. In otherwise a very data light week. The FOMC meeting minutes, they will be important, although having said they'll be important, the main issue about these meeting minutes are going to be, what is the criteria that the Fed has for hiking interest rates? Okay, the Fed has basically said it's not going to be easing any further, but policy isn't on a preset course. So the idea is that the market rate is where it should be. There isn't seem to be much of a rate cut chance coming at the December rate meeting. But the question is what would the Fed need to do in order to hike interest rates? So the minutes will be eyed to try to get a sense of what the Fed's exit plan is from this easing policy is. At the moment, data dependent, on hold. A number of Fed speakers have just sort of expressed a general happiness with the status quo. But how do we get out of this status quo? What criteria is going to be needed to start walking back some of those insurance rate cuts? So that's the kind of thing that's me looking at on the FOMC meeting minutes. So again, that's event risk, and always these minutes are always eyed very, very carefully, and often a direction will come out of that meeting when it takes place. So Wednesday, key big day for trading CAD traders and for anyone trading the US dollar. Thursday, November the 21st, there's nothing particularly to look out for here, aside for the Bank of Canada's Governor Plot speaking. He's always worth listening to. He does has a track record of having surprised markets in the past, so it's always particularly worth being aware of when he is speaking, and he is speaking on Thursday at 1:40 p.m. GMT time. So again, one to look out for. And then the close of the week, we have the PMI manufacturing and services data for the Eurozone, for France, for Germany, and for the Eurozone as a whole. Now, looking at these data points, the market is just quite used now to a slowing Eurozone. That's not new news. So a further slowdown in French and German manufacturing and services isn't necessarily a massive surprise here. I think a surprise would be if there was a pickup in these data points. That would probably be the bigger surprise. But again, Eurozone growth is so tied up with US-China trade deals at the moment that this is all sort of forming part of one big picture. And we've got the new ECB president, Lagarde, taking her role at the ECB. We haven't got a clear sense of what her policy is going to be. So at the moment, I'm not expecting this to be particularly market moving. Certainly, if things are just within normal parameters of the readings that are expected, expect that to remain fairly steady and fairly stable. You do have Lagarde speaking just before these data points. So yeah, there is risk here for the euro on Friday. But again, I'm not expecting anything massively controversial or any huge shifts on that Friday. But again, if you're trading the euro, always be aware of it. You don't want to be just trading the euro and not aware of these kind of events. which are coming up. Then you've got the core retail sales for Canada on 1:30. So that is important data for the Canadian dollar. And again, remember, if you get, you know, like weak CPI data and then weak retail sales data, that's going to increase the chances of a Bank of Canada rate cut. So that would really, you know, potentially, if you saw, so this is the thing to look for. You're looking for, you know, data to all be going in one direction. So for the CAD, say you've got weak common CPI data, and then you've got weak retail sales data, and then you've got, you know, negative US-China trade talks. So that would be three negative things. That would be negative for oil. That would be negative for the domestic economy. That would be more likely to cut interest rates. Then you're likely to see some Canadian dollar weakness, and that would be quite a, you know, an asymmetrical trade. You'd just be expecting CAD weakness. So that's the, you know, that's the event that I'm looking for potentially a right environment to short the Canadian dollar. So, you know, a good potential partner in that scenario that I outlined, you know, weak CPI, weak retail sales, breaking down the talks between US and China, then a US dollar Canadian dollar long would make sense, because I'd expect to find buyers on US dollar Canadian dollar pullbacks. That would make sense, particularly with US dollar does act as a safe haven currency, and if there was a breakdown between US and China trade talks, so I expect the US dollar to, you know, regain its a safe haven appeal in such a context as that. So that's a big, you know, that's the kind of the main event that I'm looking for. Other than that, keep looking at the US-China trade negotiations. And a number of key issues are the tariffs, intellectual property rights, and purchase of agricultural goods. Those three issues are crucial. So, you know, negative news on those is going to be negative news for US-China trade deal. Positive news on those is going to be positive for US-China trade deal. So a quiet week. It's, you know, not much scheduled to go on. But obviously you've got the polls coming out from the UK, US, China. Look for changing sentiment in the US-China phase one trade deal. And remember, if risk is on, if risk is on as it is now, you expect to have Australian dollar, New Zealand dollar, CAD strength, and Japanese yen and Swiss franc weakness. Okay, risk is off. We expect to see Australian dollar, New Zealand dollar, Canadian dollar weakness, and Japanese yen and Swiss franc strength. So that's just, you know, a very helpful little playbook, especially if we haven't got, you know, major data points coming out. Then this can be a helpful playbook going forward. Okay, guys, does anybody have any questions? Don't forget, we've got the tomorrow 1 o'clock GMT time. We have got the weekly workshop, and that's also opportunity to go through like some trade ideas that you're looking at. So if you've got any trade ideas, trade suggestions, don't forget, you can hop along tomorrow 1 o'clock and have a look. Okay, let's have a look at Euro, US dollar. Okay, chic, let's check it out. Just gonna pull up the Euro US dollar chart. Yeah, okay. The broad picture for the euro-US dollar, of course, is weakness. It's on the eurozone. Slowdown in growth, slowdown in manufacturing, slowdown in services. So that's why we keep seeing every time.
10 minutes.
Every time we see the,
minutes past the
oh, so I'll just turn the squawk off there, guys. Sorry about that.
Speaking at the
and every time we see the euro retracing up, you know, to the 200, 100 exponential moving average, we're just seeing it, you know, we're just seeing it being sold down over and over again. So at the moment, the US dollar is kind of being pushed around a lot on the risk sentiment. So if the risk is, as long as risk remains on, then you can see this is the pull. The euro is being sold on this on the kind of the slowing eurozone, so that's why it keeps getting sold off. The US dollar is being pushed around on whether it's a risk currency or not a risk currency. At the moment, risk is on, and with risk being on, then we can see that, you know, the US dollar is experiencing some weakness. So all in all, for me, actually here, I look at this, there's nothing clear for me for the euro-US dollar. I haven't got a clear fundamental driver, and I haven't really got a clear technical setup or position for this. You've got the euro-US dollar here, just, you know, recent support now turns resistance. So if you drag that down into a shorter time frame, you can just see it's okay. So there's some resistance levels up here, 1.10700, so a big round number there. So price is just being contained for now on the euro-US dollar pair, but I'd be looking for some kind of new driver. You know, either it's going to be US dollar strength. So if you saw some risk off tones coming in, you'd expect to see some US dollar strength and euro-US dollar weakness. Yeah, okay, Australian dollar, Japanese yen. That's a little bit simpler at the moment because you're just getting the risk on tones with the Australian dollar, Japanese yen. So you got the gentle bid in the pair because of risk on tones. So you've got the Australian dollar strong and the Japanese yen weak. So as long as risk remains on, then I would expect to find Australian dollar, Japanese yen supported, and you can just see it's trying to, you know, trying to take back over that 100 exponential moving average, get and stay above, and then okay, you've got some overhead resistance at 74.50 as, you know, your first kind of line of control you want to try and get over. But Australian dollar, Japanese yen at the moment is being supported with the risk on tone, so that there is at least here I can see a bit more of a case for Australian dollar, Japanese yen buyers on pullbacks. So, you know, a key level would be here, 74. That's it. I'd expect 74. So this kind of support level here. All right. This kind of support. This support level here. Anywhere in this kind of zone, about 74.10 down to about 74. I'd have that down as a pretty good support level on this pair. So any pullback into this level, I would expect to find buyers, particularly this recent low. So here, and a return here, probably 74.10. I would expect to find buyers on this currency pair, with risk tone remaining as it is with the Australian dollar, Japanese yen pair. So expect buyers here. That's how I'd look at the Australian dollar, Japanese yen pair. Okay, guys, any other pairs anyone's looking at? Gold again. Okay, let's have a little look at gold. Okay, gold, we've seen gold pull up to 1470, just hit that recent old support term resistance, pull back, drifting off, pulling away from the 100 exponential moving average. Now, what's going to be pushing gold forward is, you know, the US-China trade deal. That's the issue here, because if the trade deal goes well, then expect gold to keep falling. If the trade deal goes badly, say, you know, US and China don't agree to a trade deal, then you expect gold to be bid. So what's going to be driving gold in the short term for now is what happens next between the US-China trade deal. So that's, you know, that's the key issue to look at for gold, and that's what I'm looking at for gold. You can see you've got this sort of, you know, this key support here at 1440 of these recent highs here. So that will be another very key support here, as well as this key support down 1420 on the 200 exponential moving average. So what's going to decide this? It's most likely to be the US-China trade deal. If it gets sorted, it's a good deal. Don't expect gold to fall down, and ultimately, I'll expect some you know, some bids down. The further it pulls back, I'll expect some bids on a medium-term trade. But just looking at short-term, you know, intraday trading, you know, the near-term direction of this gold is going to be described at, you know, it's going to be determined by the US-China trade deal. Okay, guys, that's great. Thanks, Harshit. Good to cover some of those currency pairs. I'll come back tomorrow again. We can look at some more pairs, and I hope you guys have a good rest of the day, and see some of you tomorrow. All right then, guys. Take care now. Goodbye.